Hello everyone and welcome to ACCA F5 video lecture series by London School of Accountancy and Finance. Today we are going to cover BPP Study Text chapter number 1. But before we do that, let's go through the exam format. So students in F5, they're able to do the exam either paper-based or they can go for computer-based exam. In paper-based exam, basically the exam is divided into two sections. The section A, there are 20 MCQs and each is worth 2 marks, so it gives them total 40 marks. Section B, there are 5 questions, so there are 3 questions that are 10 marks each, so that totals 30 marks, and there are 2 questions that are 15 marks each, so that totals again 30 marks. So the total marks available in the exam are 100. Now let's look at the computer-based exam. So computer-based exam is basically divided into 3 sections. Section A is composed of objective test questions. There are 15 questions and each is worth 2 marks. So the total marks available in section A are 30. Section B is based on case study, so objective test scenario based questions. There are total 3 questions in this section and each is 10 marks. So again, total marks available in this section are 30 as well. And in the last section, section C, which is known as constructed response questions, there are 2 questions and each is worth 20 marks. So the total marks available in computer-based exam are also 100. Now I want to point out that most of the students actually like calculations. They don't really focus on the narrative part of the syllabus. So in F5 you're going to get maximum 50% numerical or calculations. So your calculations are going to be around 40 to 50% of the total exam, and your narrative is going to be at least from 50% to 60% of the total exam. So what does that mean? That means, well, we cannot pass the exam by just focusing on the calculations. So instead of just focusing on the calculations, we need to focus on the explanation as well. So we have to do the calculations and we have to explain what those numbers mean. Okay, that's the exam format of F5. Now let's go through the F5 syllabus. Let's see what we're going to cover in the whole F5 syllabus. So in syllabus overview, we have divided the F5 syllabus into 5 major sections, and the first section is costing methods. So some of the costing methods we have already covered in F2. I hope all of you remember. The first costing method that we did in F2 was absorption costing. We are all again going to review it in F5. Similarly, we also did marginal costing in F5. But based on absorption costing and marginal costing knowledge, we're going to build up further costing methods. Some of them are activity-based costing that we're going to cover in F5. We are also going to cover target costing. There is life cycle costing, throughput accounting, and so on. But we'll see when we get there. So costing methods is the first part of the F5 syllabus. Second part of F5 syllabus is decision making, where we have to make decisions in different situations and in different scenarios. For example, we might have to take decisions based on relevant cash flows. So what is the minimum price of a project? So minimum price of the project would be the cost to the company itself. So the cost to the company itself is actually the relevant cash flows of a project. Similarly, we are going to look at shutdown decisions. So one of the divisions of the company is not performing well. So the question is, should we carry on with that division, or we should shut it down? So we are also going to make situations like make or buy decisions. So is it cheaper to buy the product from supplier, or is it cheaper to just make the product in-house? Sometimes the companies will also come across situation where the resources are not available, or the resources are available but in limited quantity. So labor is not available, or there is limited amount of labor hours available, or there are limited amount of material is available. So in that situation, what should be our optimum production plan? So we're going to make uh, those decisions where we have a limited factor. Similarly, we are also going to see what is linear programming. It's just another way of doing the limiting factor analysis, but the decision is going to be the same. What is the optimum production plan? So the second part of F5 syllabus is decision making. Now the third part of F5 syllabus is budgeting. It's not a major part of F5, but nevertheless we're going to go through in due course. The third part of F5 syllabus, or sorry, fourth part of F5 syllabus is variances. We have already done variances in F2, the basic variances. We're going to review them in F5, and then we're going to build on that. So we're going to take them step further, and we will calculate the planning and operational variances. Similarly, we're going to look at what do we mean by mix variances, quantity variances, yield variances, and so on. So the last part of F5 syllabus is the performance appraisal. So what do we do in this part? Actually, we gather all our knowledge that we have covered in the previous four parts: costing methods, decision making, budgeting, variances, and then we apply that to a company to see whether a company is performing well or badly, or what we can do to enhance the performance. And that's performance appraisal part of the syllabus. So that's the syllabus overview. Let's get started with our chapter number 1, which is costing. Chapter number 1, costing. Now, what is costing? Costing is basically the way companies calculate the cost of their products or services. So it is a system by which manufacturers or service providers can compute the cost of their one unit of product or service. So why do they have to calculate the cost of their product or service? Because at the end of the day they have to sell it. So they want to know the selling price. So therefore they must know the cost, because they want to make a profit by adding the profit margin or markup to their cost of production. So that's the costing. And as I already said, in F2 we have already covered two basic costing methods. One of them is marginal costing, and the second is absorption costing. Now, what's the difference between marginal costing and absorption costing? So the difference is actually their treatment of fixed overheads. So marginal costing says that if I want to calculate the cost of one unit of product or service, I'm just going to take the direct costs. I'm not going to worry about the fixed overheads. So what do we mean by the direct cost? Mostly the direct costs are our variable costs like direct material, direct labor, and so on. So Nice and easy, simple, no problems there in marginal costing. Just take the direct cost, sum it, and that's your cost of one unit of product or service. However, absorption costing is a bit more complex. Uh, Absorption costing says, if I want to calculate the cost of one unit of product or service, I'm going to take the direct cost as we did in marginal costing, but I'm going to add share of fixed overheads. Now, do you see a problem there? The problem is with the fixed overheads. Why is it a problem? There are two reasons. The first reason is that the fixed overheads are indivisible. So they're not actually, these costs are not divisible costs. So for example, I'm paying the rent of factory. So the factory rent is always paid on monthly basis, and it is a certain figure, right? We cannot divide that figure. So for example, let's say I cannot say, because this time I have not produced as many units in the factory, so I'm going to pay less rent. That's not going to work. I'm always going to pay fixed amount of rent no matter how many units I produce in the factory. So the factory rent is an indivisible cost. The second reason is, which is actually another way of putting that, it is paid in total. It is not per unit, right? So factory rent is for the whole factory, no matter how many units we produce there. So because the factory rent is paid in total, so how do we know that how much of that factory rent belongs to one unit that we have produced in the factory? That's the question. So uh, and sometimes I'm going to produce a lot of units in the factory. Sometimes I'm going to produce not as many. So how much of rent every month I need to absorb into every unit? So that's the problem. So what's the solution? The solution is we calculate absorption rate, right? So what is absorption rate? It's basically absorption rate is budgeted fixed overheads, and we divide the budgeted fixed overhead by the budgeted activity level. So what do we mean by that? Is just take the total amount of overheads and we divide by number of units that we have produced in the factory. So here we go. That amount of overhead should go into, or should be absorbed into, every unit that we produce. So that's our absorption rate. Now, activity level here, budgeted activity level, it can be anything. It can be number of units that we have produced, it can be number of hours that we have worked, it can be a percentage of cost, it can be based on any variable. So that's our absorption rate. Now let's talk about absorption costing in a bit more detail. So let's say this is the start of the year, okay, and this is end of the year. Sorry, this is the end of the year. Now let's say we are planning that we're going to produce 5 units during the year, right? So do I know the actual overheads at the start of the year? That's the question. Do I know actual overheads at the start of the year? Because I must know actual overheads at the start of the year. The reason is I'm going to absorb those overheads into the units that I'm going to produce. So do I know the actual overheads figure at the start of the year? The answer is no. I don't know how much is going to be my actual overhead expenditure, actual fixed overhead expenditure for the whole year. So because the actual overheads we will get at the end of the year. Let's assume that our actual overheads at the end of the year are $100, but we don't know that yet because we are still at the start of the year. So what are we going to do? We are going to budget them. We're going to budget our fixed overhead expenditure. So we're going to use the budgeted overhead, and let's say this time our budget was accurate and we budgeted that our overheads are going to be $100 as well. Okay, and we also budgeted that we're going to produce 5 units during the year, right? So in this case, our budget seems accurate. So our actual overhead that we don't know yet, but we budgeted that it's going to be $100, and we also budgeted that we're going to produce 5 units during the year. So we can calculate our absorption rate based on these two budgeted figures. So absorption rate is going to be, as we know, it's budgeted fixed overheads over budgeted units or budgeted activity level. So it's going to be $100 over 5, that equals $20. $20 per unit. Now what does that mean? That means every unit that I'm going to produce during the year is going to get $20, right? So I produce 5 units. To each unit I'm going to give $20. So the total amount of overheads that I have absorbed into every unit that I have produced, how do we calculate that? We can calculate that by just simply multiplying our absorption rate by the actual production. So the amount of overhead that I have absorbed into my production is actual units that I have produced times absorption rate. So in this case, absorption rate was $20. So my overhead absorbed is going to be 5 units that I produce times $20 per unit. So that equals $100, which is exactly the same as my actual overhead that I'm going to get at the end of the year. So in this case, there is no problem. My absorbed overheads are equal to my actual overheads. So there was no difference between absorbed overheads or actual overheads. However, this is not always the case. Sometimes, or you can say mostly, my absorbed overheads are going to be different from my actual overheads. The reason is, again, because absorption rate is based on budgeted figures, which is then used to calculate the absorbed overheads. So our budget can be wrong. That's the point I want to make here. Our budget can be wrong, and which will lead to wrong absorption rate, and that will lead to wrong overhead absorbed into the product. So for example, let's say I did budget that my overhead is going to be $120 instead of budgeting it as $100. So my budgeted overheads are $120, and let's keep the units same, 5 units. So my budgeted units are 5 units, but this time I'm predicting or budgeting that my overhead is going to be $120. So based on these two figures, my new absorption rate is going to be $120 over 5 units. That gives me $24 per unit. Now, because I'm going to produce 5 units during the year, every unit gets $24 per unit. So the amount of overheads that I will absorb into my production is going to be actual production, which is 5 units times $24 per unit. That equals $120. Now, in this case, my absorbed overhead is not equal to my actual overhead. My absorbed overhead, which is $120, is more than or is greater than my actual overheads. By how much? $20. So how do we get that? Absorbed overhead is $120. Actual overheads are $100. So I have absorbed $20 more into my products than I should have. So what do we call this situation? We call this situation as over absorption of overhead. So if our absorbed overheads are greater than actual overheads, we call it overabsorption of overhead. Similarly, we might have a situation where overheads are underabsorbed. So let's take an example. Let's say instead of budgeting $120 or $100, the company budgets that overhead is going to be $80. Let's keep the units same. Again, budgeted units are 5 units. So our absorption rate is going to be based on these two figures. So what is going to be our absorption rate is going to be $80 divided by 5. We get $60 per unit. Now my absorbed overhead similarly is going to be 5 units times $16 per unit, which is equal to $80. So in this case, my absorbed overheads are less than $100. So my absorbed overheads of $80 are less than actual overheads of $100. So in that situation, we call it under absorption of overheads. So if absorbed overheads are less than actual overheads, we call it under absorption of overheads. So that's basically the process of absorption costing. Now let's review the formulas that we have just done. So first of all, we need to calculate the absorption rate. Absorption rate is equal to budgeted overheads over budgeted activity level. Similarly, we also looked at how to calculate the absorbed overheads. Absorbed overheads are equal to actual activity level times absorption rate. And we also saw that if absorbed overheads are greater than actual overheads, then this is over absorption of overheads. And if it is the opposite, if absorbed overheads are less than actual overheads, we call it under absorption of overheads. Now let's look at a simple question. So the question is, a company has the following information, actual and budgeted for the year 4. So the budgeted production was 8,000 units. Actual production was 9,000 units. Variable production cost per unit is $3, same budgeted and actual. Fixed production overheads are $360,000, sorry, and the actual fixed production overheads are $432,000. The company made actual sales of 8,000 units. However, the budgeted sales was just 6,000 units. And we are also given the information that overheads are absorbed on unit basis, so per unit basis. So our activity level is number of units. The question is, what is the amount of fixed production overhead absorbed amount during the year 4? So we have to calculate overhead absorbed amount. So what is the formula for absorbed overheads? Absorbed overheads are equal to absorption rate times actual activity level. So are we given the required information? Okay, one thing that I want to point out here, we are given 2 activity levels here. One is the production and the second one is sales. Which activity level are we going to take? Please make sure that in your exam you always take the production, not the sales, because overheads are absorbed into production, not just the units that the company is selling. So always the activity level is production, not sales. So yeah, are we given the required figures? So we need the absorption rate. Are we given that? No, we are not given that. So we'll have to calculate separately. Are we given the actual activity level? Yes, we are given. The actual production is 9,000. units. Now, let's calculate the absorption rate first. So, absorption rate formula is budgeted overheads over budgeted activity level. So, that's a simple calculation. Absorption rate would be budgeted overheads are, in this case, 8,000. So, budgeted overheads in this case are $360,000, and budgeted activity level is 8,000 units. So our absorption rate is going to be $360,000 over 8,000 units, and that gives us $45 per unit. Now we can put the values back into the first formula. So our absorbed overheads are going to be 45 times 9,000 units. 45 is our absorption rate, 9,000 is our actual production, so that totals $405,000, and that's our absorbed overhead amount. So the answer to this question would be B, which is $405,000. Now let's say, though this question didn't ask, let's say we want to calculate the amount of overhead under or over absorbed. So we know that under over absorbed overhead amount is the difference between absorbed overheads and actual overheads. So how much is the absorbed overhead amount? Absorbed overhead amount here is $405,000, and actual overhead amount is $432,000. So we can clearly see that our absorbed overheads are less than actual overheads. So in that case, we call it under absorption of overheads. The overheads are under absorbed by $27,000.